morning, everybody, and welcome to Taco Tuesday. And like we had mentioned before, Taco Tuesdays used to be delicious sell-off days. Today, as I said yesterday in the email, and today, we're looking for a green close today. So quickly, on schedule today is absolutely nothing. Nothing whatsoever on the schedule today. 1 o'clock, you get 3-year note. And I found somewhere, I don't know where it is, but I found somewhere, but the Fed will begin buying $30 billion worth of treasury bills starting this month. Again, don't know how often or what it's going to be, the shorter term, longer term, whatever it is. But as of right now, that's the news. I will also bring you here to Hurricane Debbie, hurricane or tropical storm. I don't know what you guys have going on over there, but Hurricane Debbie has already wreaked havoc all through Florida, is now hitting into the Atlanta area, and is scheduled to leave, go on to the coast, and then go back on to land and go straight up the East Coast, up there into New York, into Boston. And again, I got to go off memory. When you have these pretty, impactful hurricanes that do go up the East Coast, stock market tends to take that into consideration, where a lot of people won't have access to their trading platforms, and thus not too much takes place. However, this is more about Japan, and we are currently at 5204.80. We're up, 20 points, and people would think, wow, well, we're actually down 70 points from about an hour and a half ago when we were at the highs of the night, 5276. Yeah, it's been moving a little bit here, and this all comes from Japan. Japan kind of settled down a little bit, and now it's again starting to have its little bit of an impact here. Japan on yesterday coming down greater than minus 25% from the all-time highs, which were posted just less than a month ago in July. Again, started to support a little bit as we went into the open yesterday on the U.S. side, and climb upward all the way up until about 9 o'clock last night. And now it's been having a little bit of a roll off, and that is having an impact over there on the US. So, anyway, I will keep it short, keep it sweet. So, here we go. SPX, 3 red days in a row. Boom, boom, boom. Closed well above the open yesterday. All of you that took the Van Halen, 51.45, 51.50 bullish put spread, $3 or better. Knowing 51.50 is the magical number, closed at 51.86, obviously full credit. One of the things that I am watching here, though, is yesterday was the first close on the SPX below greater than 10% from the bottom. Sorry, from the open of the year, which I've said many times, that's where we're going to as we head into the election. But yesterday was the first close down less than plus 10% from the open of the year. Same thing took place over there on the QQQ. QQQ close on yesterday less than plus 10% from the open of the year. Good day, plus 10 points off the lows, but once again, all of those people that went in the morning and started buying puts, well, you learned how to shove a fist up your own ass pretty damn quick. Same thing over here on the Russell, although the Russell still continues to be quite weak, staying below that 207. Down here overnight, we're up close to around 206. Not able to really break through anything. So quickly, I will bring you onto the charts because we don't really have too much to go over. Nikkei, very impactful, very important. And today is the 79th anniversary, I believe, of Hiroshima. So, hey, Japanese paying back to everybody. Y'all fucking deserve it for what happened back then. QQQ. As you can see, we have almost retraced back to the April lows. Almost. What I'm looking at here on the QQQ, definitely your AB, period. But what I'm seeing here is a 1, 2, and the 3, having yesterday been the 4. So pending, tricky, very tricky, but pending is that fifth wave down to finish off this ABC. Pending it is, and coming down to 420 was actually pretty funny yesterday. But yeah, a dip down below that 420, we would be looking at the April lows right there around 413, which is the 2023 all-time highs. And again, this is the reason why we had those further dated outputs, and that's the reason why we closed everything out yesterday. Onto the Dow Jones. The Dow Jones AB, definitely looking at this being a B ABC. Now looking at this as a AB 1 2 with the 3, and now we're looking for a pending 4, or this just being a irregular flat AB 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 ABC ABC. We don't know yet, but holding that 383 pretty significant. We get anything below 383, then we can start, counting some tea leaves to see what's going on. IWM, same thing. This thing went nowhere all year long. So to have it come back to where it was going all year long, that was the reason why the August 16th, 207 puts, which, as you saw yesterday, almost 300% on the trade. But a lot of people got scared when we had this move up here. So emotions don't make you money. So anyway, we were on SPX again, coming down. These are your gaps that we're looking at. 3 big gaps. I'm not going to say that they are all going to get filled, but we've got 3 big gaps, almost minus 10%, almost down to, if not to, the May lows. We are crushing down on that minus 10%. We have this one gap here back from the early part of May. We're below everything except for the 200-day moving average. The 200-day moving average is the only thing that hasn't been hit, which is about 100 points lower than where we are. And like we said before, looking at this from a structure point of view, AB absolutely for the A, AB for the C with the B. Now looking at this as a 1, 2, 3, 4 possible being that this is the 1, 2, 3, 4, 5. We can easily change this where this is the 3. We are putting in the 4 over here yesterday, and the 5 is due to take us down there to around 5,000. This is not the time to be making, life decisions about getting long and buying the dip. Absolutely not. What this is right here is this is how you clean off a move that was coming no matter what. Whether you liked it or not, it was going to be coming. And I'll bring you here to, again, bring you back into history. SPX, here's your gaps. We have 3 gaps to the upside. This is your major gap. Your major gap being here from May 2, just down there to 5064. Possible, like I say, possible. Will not take out the April lows, but very, very possible. Come on here into your QQQ, looking back at July of last year. You had your A wave. That's exactly what we're looking at placing right now as our A wave. And then our B wave back to the upside, which this ended right on September 1. How perfectly. And if you look back at your history, you see how important September 1 is. And then from September 1 was where we got the wiggle, wiggle, wag, wag for the bottom on October 27th when Israel invaded Gaza. 11.76% on the entire drop. We've already well exceeded that with what we have done here just in placing the A wave. So yes, this is much different than what happened last year. However, what is not so different, and this is the reason why I bring you back to January of 2018. As I had shared in the emails for weeks, we were pushing that 351 trading sessions without a minus 2% day. One of the longest streaks in recent history. The last one being the one that was placed right after Trump became president, where we went 351 days, and then over the course of 10 days, we got an 11.47% drop. What is significant about bringing this up is we came down to this 2586. We came down to 2586 on February 9th, and we broke it and came back up. We placed our highs right over here on March 13th. We came back down to 2586 multiple times. 10 times that 25.86 was defended. And then we cruised eloquently and slowly back on up into that 29.40 area, just fractionally above the January highs as we went into September, early part of October. And then you got your minus 20% decline going into December 24 and December 26. Not saying that this is exactly the way that it'll play out, very much like what happened with Lucy. I'll bring you on to Lucy. Lucy, we will go 21.5 and we will start with June. And we will end with 0606 2016 a year later. And this is what we call the Lucy Passport. The Lucy Passport right over here on August the 18th. Bam! An out of nowhere correction that was greater than anyone expected because we didn't go anywhere for the entire course of 2015. You came up with your bounce, you came up with your double bottom here right into the end of September, and then you moved back up to where it originated from to fill your gap as you went in here to early part of November. Right over here in December was where you got your very first rate hike from Janet Yellen. And then as the new year began, the bigger sell-off to take out that bottom. So again, not saying that these things repeat themselves, but a lot of times they rhyme with one another, and no one on the planet can give you a confirmation as to whether or not the stock market has completely topped or this is the bullish wave 4 of the final wave 5, and we still have that move to the upside to come. If you speak Japanese, maybe you can get the answer faster than anybody who speaks English because, you know.
Y me llama el cocinero. Risita, ¿qué? Ve por la paellera. Venga, que las 2 de la tarde ya están aquí. Miren, bañador. En las chanclas. Todo despeinado porque no me dio tiempo nada ponerme las chanclas y el bañador. Voy a la playa, había subido la marea. Eso. Tú, había subido la marea y encontré una paella. Y la encontré porque estaba la paellera agarrada metida entre las piedras de Chipiona, del faro. Y cuando entro en el restaurante me ve el cocinero con una paellera y a ver toda la vez paellera. ¡Asómate, mira dónde llega el agua! Llegaba el agua hasta el restaurante. Había subido la marea. Jesús, hay que hacer ahora con los 2 sacos de arroz. ¡Ay, llama para Sevilla! ¡Llama a Sevilla que traigo paella! Tú y yo con el bañador y con la paella. El cocinero. No vea, para Sevilla. Y al último que cuando ya salió la bien de regla, estamos llorando los dos. Me cobró el tío la paella.